Hello and welcome to the Sterling Podcast. I'm Julia Williams, your host. And I have a real pleasure of introducing someone who's not just a valued member of the Sterling community, but he's a real expert in his field. Dom Sheahan, who is the owner and director of the mortgage branch. Now, Dom has built himself a huge reputation for giving honest, down to earth advice when it comes to mortgage issues, credit issues, or whether it's just financial well-being. Dom is a passionate person when it comes to helping people understand their options. So you could be a first-time buyer. You might be dealing with real-life experiences like divorce or just getting back on track financially. Now, Dom is doing an amazing job working with businesses, and he really helps employers understand helping their staff become more financially confident, giving tailored advice and support. Dom is a genuine guy, and it's a real pleasure to have you here. Welcome, Dom.
Thank you. What an introduction.
Definitely. But it's all true, Dom.
Good
It's
job.
all true. So, look, Dom, let's kick things off.
Hmm.
Why should someone use a mortgage broker?
So I've been in mortgages 25 years. I started as a graduate of Bank of Scotland a long, long time ago. All I've ever done is mortgages. So I'd like to think I know quite a bit about it. The rest of the team, I've got a team of 15, have got similar sort of experiences. I spent a lot of my career working for mortgage lenders. So I know what they like and what they don't like. I've got mates who run them now. So that uniquely positions but us as a team to get those where you want to be. But your original question about why you should use a mortgage broker,
Yeah.
it's never been more important to take advice. If you go to your bank, they've got about a dozen mortgages which they will sell you because they're not giving advice. They can only sell you what they've got. By coming to us, we're not selling anything. We've got around 12,000 mortgages available at any one time across nearly 100 different lenders. There's a world of
Right.
options out there which lenders you won't have even heard of, but they're there to help. They can really, really get you where you want to be. It's not just the big NatWest, Halifax, Santander, Barclays sort of crew. There's loads of little options where we can help get you where you want to be. So by coming to us, you get access to all of that. You get access to a helping hand throughout the process. Certainly buying a house at the moment is pretty painful. We end up being that bit in the middle between the estate agent and the solicitor. And so we are here and my team are here to get you where you want to be.
A trusted support, I suppose. So, what's the
Yeah.
sort of common misconceptions or myths, when it comes to using a broker?
I think there's an element of people think I'm trying to sell something, or I'm going to give you the wrong product or whatever, or give you something which earns me more commission. Well, actually, we have to disclose, and it's probably one of the only industries I can think of. We have to disclose exactly what we earn in what's called an illustration. You can see it on there. And
Ah,
actually, the difference between, if we put it with, again, NatWest or Santander, it's negligible. And actually, we have to demonstrate, and we're required to under the regulator, because we're regulated by the Financial Conduct Authority. You can see my name in lights if you go online and look at the Financial Conduct Authority's register. We have to demonstrate why we've advised you to take that particular mortgage. And we'll provide you with a suitability report letter, which explains why we've done that. So the whole process is a highly regulated, structured process where you end up getting the product that you need, which is suitable for your needs, not something which we go, I'll just have that one. I mean, why would we do that anyway? We want to make sure that you get where you need to be. And many clients have been with us for many years because they know that we can get them and keep looking after them and their friends and family.
so on that note, well, you've just said, you get the best possible deal. If I was to come to you, how would you get me the best possible deal?
So, look, first of all, it's about finding out what you're trying to do. What's your situation? I typically find there's usually about 3 or 4 key criteria points that we've got to meet. It may be you're self-employed. Well, are you a sole trader or a limited company? If you're trading at a limited company, so you're a director, are you taking dividends? Fine. But then it may be that the business is making a healthy net profit and you're not actually drawing those. So again, there are lenders who will look at not just what's on your personal tax return, but we'll look at what's the net profit of the business, which could be much higher and can get you with the borrowing you want. So again, it's about understanding your particular circumstances. It may be you've got you've had some credit issues because you recently had a breakup historically, and there's something in the background. It may be the property you're buying. It's got a thatched roof with 4 acres and some equestrian facilities. Not every lender will like that. So again, it's not just about you, it's about the property you're buying. And then look, I've been talking all this time and I haven't even mentioned interest rates, fixed rates, trackers, all that sort of stuff. Because look, again, that's the bit we get to when we've sort of worked out, first of all, who's going to lend to you. And then we go, right, fixed rate, trackers, all that sort of stuff.
So look, the other question I want to ask you, because I know that you can talk for England, to be honest, Dom, which is good.
About mortgages, I'm really boring otherwise. Yeah, all I can talk about is mortgages.
Now, earlier on in my introduction, I mentioned the fact that you also support employers help their staff with their financial well-being. How does that work?
Yeah, so there's a program we kicked off about a year ago. I think if you speak to HR directors of businesses or business owners, financial well-being or employee financial being is a real buzzword. I think if we speak to employers, that they've usually got some sort of employee benefits in place. A discount scheme off Virgin or whatever, or 5% of Boots and cycle to work, things like that. There's usually a pension provider or somebody you can talk to, an IFA around pensions. But every single time there was nothing around the mortgages, which is actually, your mortgage is probably the biggest monthly commitment an employee has, other than childcare. They're usually quite similar, and it's a remarkable gap. And I think what we're finding is that forward-thinking employers recognise that this is an issue, because people are, right now, if you've got 100 staff, let's say half of them have got mortgages. They're sitting there, and on average, rates have gone up. So they are worried. They're doing their job, and they're worrying about their mortgage, because on average, it's gone from £700 to £1,000 a month. That's a real world happen right now. That is the average, and they're worried about it. So it's affecting their performance at work. So I think when employers understand that and recognise that, this is an issue amongst the workforce, and then the other half of the workforce, of course, are renting or living at home, and maybe they're thinking, I can never ever buy this. I'd love to buy, but it's really getting me down because I don't think I can ever get there. And actually giving them and signposting someone who they can talk to and have a conversation with. And bear in mind, it costs the employer nothing and it costs the employee nothing to work with us, because that's the benefit. We don't charge a broking fee. So myself and my team are here to help first people who potentially can they become a first time buyer? Can they get on the housing ladder? And also those employees, who are worried about their financial situation and want to have a chat. And I think if an employer can just signpost that, and that might be they have an intranet, it may be with some employers we do lunch and learn sessions, or it could be sort of old school, just a laminate poster by the coffee machine with a QR code. Whatever works really. We've got that sort of we'll engage in sometimes we can provide content, regular mortgage market related content for the employer to put on their intranet. So it's whatever works. So but I think forward-thinking employers are really doing it. I think I'm really excited that we can really make a difference to people, because I think it's so fragmented at the moment, and it's amazing how employers sort of people, what did you do? Or they're speaking to their colleague across the desk. Oh, I don't know. I went in and spoke to Halifax and they couldn't help me. Oh, it's rubbish. Again, it's that thing about education, talking to people, that there are people called mortgage brokers who are independent, who are here to help and offer advice to get you where you want to be. And I think, again, it's an education piece. But
do you know what's lovely
it's
talking
exciting
to you, to be honest, Dom, because I can feel your passion and your enthusiasm coming through this really now, and actually that's what people need, particularly in this sort of line of uncertainty in terms of the world. Now,
I think we are in an uncertain world. It's difficult.
Definitely.
And I think,
what I'd also like to ask, for employers, what sort of financial issues do you come across that actually employers need to know about, that their employees might be, we've kind of touched on it.
I mean, look, clearly we're not going to, I don't want to say, look, in terms of, we're not going to discuss an employer's individual financial situation with their employer. That is not the purpose of this at all. It is a confidential. It's almost like a doctor. You can't speak to anybody about that, and that's fine. I think the employer understands that. But I think if you have, if you, as an employer, if you can provide something which is free, which is able to signpost and give those employees something where they can actually have a conversation with about that biggest monthly commitment. It's really, really important. And I think the other bit that we've talked about mortgages, but really importantly, when we do a mortgage and we put you in a load of debt, we also talk about protection. And when I talk about that, most people think about life insurance, but actually that's almost the last bit we talk about. So this is where it ties in with employers. If you're an average employer, you employ 100 people, statutory, if somebody gets hit by a bus, for example, and they can't work for you for 2 years, horrific, terrible, right, okay. Your standard with an employer, you'll pay them for a month, and then they're on statutory sick of £100 a week. That's it. That's all you're getting. Now, that is a real, that's a real worry, both obviously for the employee, because we need to have that conversation, how you're going to look after yourself, but also from an employer perspective. Suddenly like, oh, should we maybe we should help them out. And the HR directors go, no, that opens a whole can of worms. This is really difficult. So by making sure that employees are having a conversation and putting in the right protection building blocks in place, if something does happen to one of your employees, these insurances are kicking in. So you've got your income protection policy, which will kick in, which will pay you, 60% of your salary for the rest of your life if you can't work again. And these are not hundreds and hundreds of pounds a month. The average policy, to be right, is around about £15 a week. This is not big, expensive stuff to put. Yeah, it's people think, oh, it's really expensive. Oh, it's a rip-off. Oh, it's like, well, you're putting yourself in a massive debt. And it's amazing. People insure the dogs and the cats, their mobile phone, and they don't. If you had a cash point sat in the corner of your living room, and it chucked out £2,500 every month, would you insure it? Of course you would. If the house burns down or something, yeah, of course it would. You're the cash point. That's all we're talking about. And I think, again, people think we're trying to sell them something. It's like, no, it's literally put an income protection policy in place. And we can actually work with employers, because some employers might have something where they pay full salary for 3 months and then half salary for another 3 months, for example, in that example where someone's hit by a bus. Great. Well, we can set a policy that doesn't start paying until month 6. And that's much cheaper than a policy which has got to pay straight away. So again, it's just working hand in glove with employers to make sure we're putting in place protection policies, not just like the mortgage, but making sure protection policies are in place so that their employees are supported.
I think it's having that knowledge, though. I think it's that knowledge.
Yeah,
to be honest with you.
I think it is. It's about education,
informing people.
Yeah,
definitely.
Definitely.
So moving on to a different topic now, because this affects a lot of people. I'm going to use the D word, divorce. Yeah. A lot of people who get divorced automatically assume that they can't get onto the property ladder. So I'm going to give you a real life scenario now. There's a friend of mine, not naming any names, but, they're going through a divorce. They had some joint credit together. The cards weren't paid. The other person didn't pay their bit of the mortgage. Can they still be helped?
Look, yeah. I mean, I think it starts with looking at a credit file. People say, what's a credit file? Well, we tend to recommend using something called Check My File. It's a free trial. You can cancel it after 30 days. But the point is you can dive in, put your details in, and you immediately get a snapshot of what your credit is. And the reason we use them rather than, you might have heard of Experian or Equifax or Call Credit, Check, whatever. Check My File actually shows all of all those 3 agencies, Equifax, Experian, Call Credit. So we get a real snapshot. And the reason that's important is that, sadly, sometimes the data is different. And one of the little tip, one of the dark arts of broking is knowing which credit reference agencies, which lenders use. So we're presenting it to the right lender to get the right results. So look, the starting point is getting a credit file, and we can look into see it. And look, we see this a lot. It's called financial abuse, and we're alert to it. Lenders are alert to it, and I think when you look at a credit file in a divorce situation, you typically see everything's fine, and then poof, everything, dots, red marks all over the place, bang, and then it's sort of there, and you're like, well, what happened there? Well, that's when it all went okay, fine. Whereas, look, if someone has mispayment, look, they're just, they're not managing themselves. I mean, that's a whole other thing to look at, but potentially not managing themselves properly. But if you've got an event, you can really see it. And I think it goes back to those world of lenders, not just your high street, as we talk about, your Barclays, Santander. There's a whole lot of options out there. And again, people think, oh, they're really expensive or high fee. Look, they're clearly not going to be as cheap as the cheapest lender out there. But the point is, this is about a credit journey. So often we'll put somebody on like a credit repair. We can help them get to where they want to be, and they might take a 2-year fix, so that because the further away you're from that poor credit, then we can move you along to get you to those much cheaper lenders and get you where you want to be. And I think, going back to specific around divorce, we see obviously there's a loss of one income, so that can be quite difficult for that person to obtain the borrowing they need on their own. So often the property's maybe been sold, split up, they've had some cash from the proceeds, but then we've got lenders where we can use friends, family incomes to go on the mortgage to boost how much they can borrow. Again, this can be not forever, but certainly we see it where mum, dad, and daughter have gone on the mortgage. But importantly, mum and dad don't go on the deeds of the property. Why? Because that would create a huge stamp duty bill for mum and dad. So it's called a joint borrower sole proprietor, which is a bit of a mouthful mortgage. But the technical validity is there to enable people to get that income boost, to get where they want to be. They might have had some credit issues in the past, but again, they've got lenders who can help. But I think I say it a lot. It all starts with a conversation. I can't help if you don't talk to me or one of the team. And I think, again, it's trying to break down misconceptions, barriers and things like that about, and so sadly, sometimes we don't get involved until it's a way down the line. You're thinking, I wish you'd spoken to us, a few months before. But look, I always say there's usually a lender out there who can help. Yeah, there's usually a lender out there who can help. And yeah.
Sometimes the issue is, though, that people bury their head in the sound, or they've listened to somebody down the pub. And really, like you said, it all starts
you make down the pub. God, that very knowledgeable, that fountain of knowledge. My mate down the pub said, oh, yeah. So what, you're going to think of him rather than me, been doing it 25 years, and the rest of the team who are knee deep in it all day, every day, dealing with lenders, changing criteria, changing rates. Rates fluctuate up and down. It is a dynamic market. One of the points some people go, oh yeah, I'll think about doing, interest rates are going down. I'll wait a bit because my mortgage doesn't finish for another 4 months. And I'm going, no, you need to do it now. And I sound a bit like a used car salesman, but if you don't do it now, what's happening is lenders, literally yesterday, HSBC pulled their rates. They've gone up, right? So last night, we were literally keying in clients' applications because you secure that rate at the point we submit the application. So you've got that rate locked in. Rate's gone up, doesn't matter. You've got your deal. We go through an underwriting process. It gets offered. It sits there on this remortgage. And then when your current deal ends, it just flicks over. And so you've locked in. If you've waited and waited, you've lost that deal. Now, if rates do come down, and I guess it's talking rates going down, well, we'll just get you. But that's our job to do that. We will monitor that over the next 4 or 6 months to get you that deal. And if you've gone direct to the bank, they don't care. They ain't going to tell you that. They're not going to tell you anything. They've got you. They whatever. Obviously, if rates go the other way, well, who cares? You're sitting pretty with your offer. But sorry to go off on one, but it really is. It drives me potty. And then people leave it too late. Oh, my deal finishes next month. I'm like, we've got to get an application. It takes time. Valuations, underwriting, bits of paper. Look, I understand the mortgage is one of those, life administrative things you've got to do. But we try and make it easy. We've got a client portal. You can upload documents. You can see what's going on. We've got a great team here. You can pick up the phone all the time and chat to us. We try and make it easy. I mean, I guess, it is sometimes a little bit painful, but we will do our best to smooth out the process.
I think one thing for certain, Dom, you've certainly demonstrated why it's so important to speak to somebody like you, a mortgage broker, who has the wealth of knowledge, has the open market, because actually talking to you today, there's a lot of things I just didn't know. I think it's so valuable to give people that education and knowledge, really. So you're doing a great job.
I think people, I think that bit where, just Google it and get the cheapest rate. Well, you've no idea whether that lender, they probably won't lend to you because you don't fit the criteria, because you are, whatever your employment situation, that's the thing. It's not about getting always the cheapest rate. I wish it was sometimes, because people's complex situations, I'm trying to do that. I'm buying that. I sold that business last year, so my income's dipped on that, and then the property itself has got this thing going, and it's like, right, stop a minute, let's try and work it out. It isn't going to be able to Google it, and you can do that, and you can keep submitting. Oh, let's go in that way. So that's the cheapest one. Oh, decline. Oh, okay, spent loads of time. Oh, let's go with Sam. Oh, they've declined, and suddenly you decline it. You're spending all your day doing that when you could just, we'll sort it, because we know that we can. People go, oh, I tried to go with them, and I'm going, well, why would you? I knew instantly. I know there's no point you going to that lender because they'll decline you, because I know your situation. Definitely. And you wasted 3 weeks. So, yeah.
So Dom, rounding off our podcast today, is there anything you want to share with us that you haven't already covered today? You know, because you are a fountain of knowledge, you are the expert. Is there anything else? You know, I know you've mentioned before you've got your app. Is there anything else you want to discuss?
Yeah, there's two things actually in terms of tech, and I think we're all moving forward in tech and AI, and how can it help and do us. And I think as a business, we've partnered with a number of product providers which helps clients and helps us. So we've got a free mortgage monitoring tool. So this is literally if you do a mortgage with us, you get put on this, or if you want to do it now, you've got your mortgage, multiple mortgages. You click on the link, you set it up. It's a bit of setting. Find it. What it'll do is it'll find your actual mortgage. Say it's with, I don't know, Coventry Building Society. It'll find the one you did 3 years ago. And that's great. You've got 2 years left on your 5-year fixed rate. Brilliant. What it's doing is it's checking every single day against those 12,000 products to see whether you're on the best deal. So and it's looking to see whether it's worth chewing that early redemption charge, because you will have an early redemption charge if you've got 2 years left. And it's seeing, it knows what that is, and it's seeing if there's a better rate and it's worth doing that. And it'll alert you and me if we need to have a conversation. Now, it may be that the criteria doesn't fit, whatever, but the point is from a financial well-being, I know my mortgage is sorted, I don't need to care about it because it's done. And you get an email report every month going, we've checked 450,000 times. Your property's worth this. It's still using big data to give you an update on your property, some sort of tips and things. Are you thinking about selling? You're thinking about doing this, whatever. And it's great. It's a free tool, and so we market that to the employee benefit situation. But indeed anybody can have it. I mean, many Sterling members I know have got it, and it's great. And 6 months before the end of your deal, it will definitely alert us and you to have that conversation to get going. So one of the team will be like, Julia, we need to sort your mortgage out. So again, really cool. And then the final bit is we have a home buyers app. So that's really first time buyers. And again, it's about educating, making them understand, what's a credit file? Why should I not take, should I have a car finance? Is that bad? Or why do I need to be on the voters roll? Or all these sort of things where, how do I save for a deposit? What's a lifetime ISA? Well, the government will give me free money. Yeah. So it'll talk to them about that. It's a free app. They can download it. And play with it. They can do affordability calculators, because you know what, everyone wants to like play and do these sort of things. So again, it's that journey. We almost, a lot of time we're talking to people and they might not be ready to transact for 6, 7, 8 months. That's fine. This is about them understanding what's possible and then going away and getting their ducks in line. And then they'll come back to us and go, Dom, we're ready to, we've done that. We've saved for this. We've paid off that. Let's crack on. And I love when we get that bit. It's great. It's really cool.
Do you know what, Dom? I love talking to you because you are so passionate and you've got so much knowledge and experience, and it is really a joy.
Thank you.
If you've enjoyed listening to Dom today and anything he said resonated with you, please do reach out to him. His details will be below this podcast. But honestly, I think, Dom, you're a real expert, and it's just such a pleasure to listen to you. And I realise now that actually it's all about the education, because a lot of things that you've said today just didn't know. And in terms of the apps that you mentioned as well, that's incredible. So thank you for being my guest today. Thank you for being my guest.
We can put the link for the apps in this hopefully later. I'm sure
definitely we will
on the thing, because they're free to use.
Definitely. Thank you so much, Dom, and thank you for listening.
Thank you. Thank you. Bye.